What to do in a crash. Hey guys, RC here. In today's video, we're going to be talking about what to do if everything goes down, it crashes, and yeah. So these are my four or five tips that I would do. In the next video, we're going to be talking about the 6 ways you can prepare for a market crash. So let's go ahead and get started. The first one is take a walk outside. Now, I definitely know what it feels like to see a portfolio drop and you're kind of getting a little anxious, and the best way to fix that issue or really mitigate it is to take a walk outside. Clear your mind. Walking is a really good way of doing that. It works for me, and when I get nervous or really kind of stressed out, that's what I will do. So that's for number 1. Number 2 is create a plan of action. This is really important. If you do not have a plan, you're really not gonna, it's really not good. I definitely know what this feels like, because when I had that 50,000 from the crypto investments, from the DeFi, I didn't have a plan. It was just all this money kind of building up, and the reason I lost it is because I started just making emotional decisions on the spot. I was like, okay, this coin's doing this, okay, I'll buy that. Okay, this coin's doing that, I'll buy that. That's really dumb. You need to have a plan before you invest, and you need to have that, you need to stick to that plan while you're investing. So if you have a portfolio and it's doing good, great. If it's not, starting to go down, the plan that you created before you even started the portfolio is going to carry you through the good and the bad. So that's number 2. Number 3 is invest into your portfolio. If the whole stocks or the crypto market or any market that you're invested in, whether it's Forex, crypto, and stocks, if it is down, it's on sale. Yes, the value is, it's going down. It looks theoretically like you're losing value, which you are kind of, but you're only actually losing if you sell. If you don't sell, then you still got the amount of shares that you bought when you first got in, and the only difference is you're getting those same shares at a discount. It's kind of hard to, it's easier to say it, and once you're in that position, it's a lot different. I know how it feels. So invest more into your portfolio. That's what I'll say for that. And number 4 is a big one. This is the question you get a lot. Well, how do you invest into your portfolio? What do you mean, like, just buy more coins, buy the dip? What the heck does that mean? So the way I interpret that is by dollar cost averaging. This is a tool that a lot of investors use. Traders, I think, use this tool, but mostly investors use the dollar cost averaging tool. So the way I see this is invest with the amount of money that you will not need for the next year or so. So that's the way I say it. Another way that other people say it is only invest what you're willing to lose. The reason why I don't like that is because I don't go by that standard. I don't play in this game to lose, I play to win. So that mindset's telling me, like, well, if I lose it, it's alright. That's not how I see it. Yes, there's risk, but part of you investing is that you've already done your due diligence, so you kind of know where your money's going, and you have confidence in this project, so that when it does drop, you're not going to be, saying, well, I'm just risking it, willing to lose this amount. No, you're not trying to lose, you're trying to win. We're trying to, win in the long run. So the way I say it is just invest with the amount of money that you're not going to need from a year from now, because you're not going to need it. You don't want to be selling your your assets before the 1-year threshold, because you'll have to pay a lot of tax. So basically, dollar cost averaging, if you have $1,000, the simple way is just lengthen it out. Don't invest that $1,000 all at once. Take that 1,000, and if during the whole month of January it starts going down, put like $50 on this week or $100 in next week, and just kind of stretch that $1,000 out as long as you can during the whole time that market's going down. And what it does is it evens out your risk. Rather, if you just put $1,000 all at once, and you bought the stock at $100, and it's tanking all the way down to $50, and you just put 1,000 in when it went from $100 to $90, well, that's great. You got in at $90 with that $1,000, but it went all the way to $50. So you missed from 90 to 50. There's a $40 range right there that you could have picked up more shares at cheaper prices. So I hope that makes sense. We'll cover more about dollar cost averaging in the next video, but those are my tips to what to do in a market crash, which we already are experiencing, as I am down over 50% in my portfolio. So yeah, I hope that's encouraging you guys and kind of gives you an idea of what to do. So that's gonna do it for today's video. We got more drone videos coming up soon, because if we're not making crypto videos, we're making drone videos. So thank you guys for watching.